Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at Manhattan supply, 6,439. Show me that chart.
Surprisingly enough, that is a tiny tick down about 0.2%. So essentially, supply in Manhattan right now is flat from last week.
Yeah, it's not flying. I mean, it shifted up. It shifted up, and it's actively updated supply, shifted up, but it's not going anywhere like we thought it might. So we'll keep an eye on it. I mean, does it go to 7,000? Does it go to 6,000? Where does it go first? My money's on the 7 handle, but we'll see what happens entering a typically slower summer for listings. Let's move on to Manhattan demand pending sales, 4,704. Show me that chart.
It's another episode of it's flat again. So this is down 0.6%. So really between supply and pending, it's shaping up to be the calm before the storm.
Yeah, it's boring. I mean, it's boring. Everyone's like, wondering what's going on here. So tell me something. There's a lot of stuff going on outside. There's a lot of fireworks happening outside of our world. I'm very happy to say that we've been talking about that. We've been prepping our viewers about all that kind of stuff. Hopefully you took action on it. When I see the market pulse, it says 0.73, John. So it's lingering there. It's been lingering there for weeks now. So we'll keep an eye on it. In the meantime, let's look at the weeklies, see what's going on in the weeklies. That's monthlies. I don't want that. I want weeklies. Supply, 428 things. That looks like it's ticking down. Show me that chart.
It is ticking down. So that's down 8% from the week before. And this is what you would expect. You expect the weekly supply to start ticking down. But, again, if you're doing that year-over-year comparison, I guess year over 2 years, because we want to look back to 2019, it's up about, new listings are up about 16% or so compared to where we were 2 years ago. So lower on the week, but higher in terms of what you would normally expect at this time in the season.
Right. So lower week to week, but higher in terms of seasonality. So there's a decent amount of new listings coming on the market. Good to know. Let's go on to contract signed. It still looks good, even though we're down. It's a relative shock. We're all the way up there, and now we're down here, but we're still high again. 237 things. Show me that chart.
Yeah, so that's down 8.5% on the week. And again, if we're going to shift back and forth here. So if we're looking at that where it was in 2019, right? 2019, we had about 218 contracts versus this 237, whatever it is. So slightly higher still, Noah, but those trends are converging. So seasonality is coming right back into focus, and it's becoming a lot more clear that we are in a summer slowdown.
Yeah, and you got the relative slowdown. I'm not going to get shocked, but I mean, if you were doing business in this market for the last 15 months, it was going 100 miles an hour, and now it's going 65. I mean, given what's going on out there, we have to keep a big track of this. And I want to just talk about broken deals. Everyone's talking about broken deals, buyers backing out from broken deals. It's not an easy thing to track, John. You got to think about what happens with a broken deal. It's active on the market. It goes into contract. So it's contract signed. And then at some point later on, it's back active on the market. So for definition's sake, if I were to talk about broken contracts, and here's the chart, it would be things that are in RLS that were active, contract signed, and then they came back active a couple of times, and we confirmed it. This is what that looks like in terms of monthly broken contracts. And, it is up. It is up. So we could say, okay, it's rising, right there. That's something. But I mean, look where it was in the majority of summer and fall of last year. So I don't know if this is a seasonal thing yet. I know I'm hearing anecdotally what you would expect to hear, Johnny, from the rate rise environment that's going on out there, but I'm not seeing it fully in the data just yet.
I'm not either. And truth be told, we don't really have any insight into what's causing these, whether buyers aren't getting approved by the co-op, whether the person buying a condo can't get a mortgage, whether or not something fell through, with no financing. Who knows exactly what's going on here? But you're exactly right. So in a time of panic, no, you would expect that number to be a lot higher than it is right now. So right now, it seems like buyers are still getting deals done.
Yeah, and I mean, you look at contract activity, we're still doing 1,100 deals a month. We're still doing 237 deals a week, even though that's a bias towards the downside of the monthly. That is still a liquid environment. It's still a liquid environment. If I go over to the market pulse, if I go over to the UrbanDigs market pulse and I look at the market pulse, all right, we like to look at the seller's market, buyer's market. I mean, it's trickling. You know what I'm saying? It's trickling. Yeah. I don't see any steep fall off of a cliff type of a situation that you would maybe expect from a market that's shutting down.
Yeah, I don't see that either, no. And I think that's a fantastic point, because I think right now, I mean, given everything that's going on, right? Fed's raising rates. Who knows what that terminal rate is going to be? It could be well above 3% for all we know. But the idea is that the macro forces, right, are kind of pointing to a general slowdown of everything, including real estate. So if you're looking at this and you're not seeing signs of panic, well, that's because it's early. And if you look back at, say, 2013 in this chart, mid 2015, even mid 2021, the market pulse does have these steep drops. So
Yeah.
if you're a seller out there, be aware, because right now you're not seeing signs of panic, but you could see it and it could happen quickly. So
Yeah.
I'm just gonna say right now, cut your price. That's my takeaway.
Yeah.
if you're
Well,
out there.
yeah. Hey, listen, sellers, that's been our takeaway for months now. Is get it done. Get on the market early and get it done. Price right. I'm glad you mentioned the terminal rate. I mean, listen, there's another 75 basis point high coming. There's another probably 50 basis point behind that. There's probably another 25 after that. We got another big bazooka coming. And then he's going to probably start slowing taping. And by slowly taping those rate rises, there's still rate rises coming. We're going to end the year at 3 to 3.5%, and we're only at 1.5 now. So we have another $1.50 of percentage points to go in rates. Think about what's going to go on to our market. Think ahead. If I'm a buyer, Johnny, I'm looking at this kind of number. This is the real time stuff. This is the real McCoy. This is going to fall if the market has a shift down like it did during COVID and like it did during every other downturn. Now, something like absorption rate. Everyone talks about, absorption rate, price trends. Those are lagging. Those are rear view mirror. We got to wait 3-4 months for the deal to close. And then we see it another month later, 2 weeks later for accuracy. And by the time we see it, it's a picture of what happened 4 or 5 months ago. But even absorption rate is starting to turn, Johnny.
That's exactly right. So absorption is lagging, where the market pulse is real time. This is lagging. So it's starting to turn. It's not quite popping yet, but that's exactly the point.
Right.
You don't want to be cutting your price when it's popping. You want to be out there in front of this. So right now is still a great time if you're a seller. They still have buyers out there. We've seen they're not breaking contracts. They're getting those deals done still at an elevated level compared to a couple of years ago. So get your price cut your price and get it closed and move on.
Yeah, it's early, and you still got liquidity in the market, so take advantage of those two things, given what's going on everywhere else. Exactly. I get it. Good message, Johnny. John Walkup, thank you for pulling up all those data and those charts. I really appreciate it. I'm sure the audience does too. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, you guys got questions, we got answers. Please visit our forum right down here. And if you want any of the reports we showed you today, it'll be right up here in just a little while. Other than that, this has been your weekly Manhattan update, and we'll catch you next time.